This is Mitch, and welcome to the 1000houses.com real estate podcast. I had some storms down at my ranch, knocked out a bunch of things, including internet. So I had to drive to a small town and get some internet connectivity, and I'm doing this podcast from the truck. But you know what's good about that, or the lesson to be learned from it, is we do what we have to do. We adapt, we overcome, and we just get it done. It doesn't really matter, because you don't care if I'm sitting in my truck or if I'm on a boat in Hawaii or wherever, as long as we're delivering some content out here that's useful to you. And that's the point. So today I have Sean Pan on with me, and he specializes in doing rentals all over the nation from wherever he's at. And we talked about that on a podcast with him a while back. Today we're going to talk about hard money lending and rental loan that they have. So with no further ado, how are you doing, Sean?
Hey, Mitch, thanks for having me back on the show. It's a pleasure to be back on here.
Yeah, so give a little bit about your background, so some of the new people that don't know if you know where you're coming from, and then we'll get started.
Sure. So for those of you who haven't listened to our other episode a couple of months ago, my name is Sean Pan. I'm a real estate investor based in the Bay Area. Most of my portfolio is in out-of-state rental properties. So my girlfriend, Sharon, and I, we own around 22 rental properties across the nation. I flip homes here locally as well, flip about 4 or 5 properties. And I also work as a hard money lender. So most of my days are fielding calls from other investors and giving them money to basically fund their dreams.
All right, so let's start with the hard money lending side. You know, I'm a hard money lender too since 2005. I have my own reasons why I got into the business. I didn't want to go in the business. I had to do it out of necessity. I'm using a mixture of my money now plus private lenders' money, and I'm just borrowing the money at a lower rate and I'm lending it out at a higher rate with some points and fees and stuff. Basically, I needed to become a hard money lender because I had too much private money and I couldn't find enough deals at my underwriting criteria to spend all the money. But if I didn't keep these people's money out, or I left them on the sidelines too long, they would go away. So I invented the hard money loan business to give short-term loans to lenders who were just quick flipping, so that I could occupy the money until I could get to it. And you know, that's what I did, and that's what I've been doing for 16 years now. So tell us about your hard money business, and how do you get into the hard money loan business, and are you using your money, or are you using other people's money, and how does it work?
Yeah, so great question. So unlike you, it's not my money or my own friends' money. What we're doing here is I work for a company called Conventus Lending. We're a nationwide lender. And because of that, we have a lot of funds. You know, we probably do on $100 million of loans per month. And that's, again, sourced from bridge loans, which are typical hard money loans, as well as our long-term rental loan program. And the way that I got into the industry is because I was a flipper myself. And as a flipper, I used several different hard money lending companies. And this was the one that I liked the most. They had the best rates and best service. And then when I became, somewhat of a small influencer with my YouTube channel, podcast, and meetup group, they said, "Hey, Sean, why don't you work with us? You were referring us all this business anyway." And I figured, you know what? This is in line with my industry, so I might as well work there. So even though I used to be an engineer back in my past life, I hated my full-time job. I thought I would never have another full-time job. This one just aligns with everything I do anyway. So I'm like, okay, sounds good. So now I work with them full-time.
Yeah, it makes perfect sense. You know, a lot of the businesses, I have 8 businesses. I didn't start out wanting to do those businesses but what happens is you've got a certain kind of exhaust that runs out of your tailpipe when your engine's running, like let's say you're a sawmill and you make trees into boards. So if you're making trees into boards, what do you have a lot of? You have a lot of sawdust. So you can either pay to have that sawdust thrown away, or you can figure out what can be made out of that sawdust and sell the sawdust, or create another product like laminated boards, or poison it with ant poison and then put it in bags and you spread it out for ant poison, or what I'm saying? You may end up in the ant insecticide business, whole different thing, but the reason why you're there is because you're supplying, you have this residual. So
absolutely.
So you're in this business of flipping, and you're around investors all the time. you're probably working 24/7 for that company as you're just walking around, because you were going to tell those people about that company anyways, where you just weren't going to get paid.
That's absolutely true. So before I was doing this, like I said, I was doing a podcast, I was doing YouTube, I was doing a meetup group, all for free. I had nothing out of it, right? Podcast is just for fun, talking to people, learning, sharing the information. Same with YouTube. Like right now, I've been doing YouTube for about 2 years now. I have around 4,200 subscribers, nothing too crazy. And it pays me about $300 a month. But because I'm doing YouTube videos about real estate investing, about hard money loans, we get so many leads from that. So it's just very synergistic with what we're doing that we would have done for free anyway.
Yeah. And so you probably use like some kind of affiliate program where you have a link and they run through and they're already kind of earmarked as yours. And if they make it to the website and fill out something, they know that they originated from your podcast, or that they're coming from you. Your company knows to pay you.
Pretty much. I mean, I basically tell people to schedule a call with me. I always have my Calendly link in the description somewhere, and then they book a call with me. We have a one-on-one session to find out how we can help them with their properties.
Cool. And I like that better, because face-to-face service, or talking to people in person, always does better than just go to my website and sign up or read. People don't really like to do that. So what kind of loans are you giving? What's a loan scenario look like? I mean, who's a good borrower for you, and why are you good for the borrower?
Yeah, so typical loans for new investors, people who have no experience, we can probably go up to 80% of purchase price and up to 80% of the rehab cost. And depending on the location, that's going to be around 8.5% and maybe 1 point for origination fees. So our rates are pretty competitive, even for people who aren't super experienced. Now, of course, the more experienced you are, and of course, the more repeat business you do with one company like ours, then the rates go down, terms get better, probably do more leverage. And so I would say in general, we can fund most of the states in the nation. There are some places we can't just because of licensing. So if you fit in those areas and your purchase price is above a certain threshold, then you're a good fit for us. Okay.
So you're a nationwide for the most part. So that's one thing. So I'm going to have all your information over at 1000houses.com/PAN, PAN. Okay. Real easy. So if you want links or connections, or you want to learn about this company or the name of this company and where you can go to get an app and fill out an app, just go to 1000houses.com/PAN, PAN, and it'll all be over there. Probably have contact information for Sean himself. And, we'll make it real simple for you guys to get connected. The key to the real estate investing business, right, is number one, got to find deals. You don't find a deal, nothing happens. Number two, you have to fund the deal. You have to find a way that this deal is going to get funded. And then you got to sell it. So funding's always a major source, and is usually what causes the ceiling for a lot of investors. Like they can't do any more business because they don't know where to fund any more deals from, And so hard money lenders can be that bridge, and can help fill that gap. Sometimes people go, when I was borrowing money from hard money lenders, they wanted 12, 14, 16%, you know what I mean?
Yep.
And points. It didn't matter though. Sometimes the cost of the money is the least of the worry. I was only going to have that was 16% annual interest with a couple of points. I was only going to have that property for 30 days or 60 days. So I was going to pay a fraction. And instead of making, $30,000, I would only make $28,000. But it was either borrow the money from an expensive place or a hard money lender, or make 28,000, or make zero. And I'm not saying you're like the interest rates that you just named sound pretty damn competitive. I mean, I wish I could have. I started my whole career at 10 and 12% just from private people, and so I was paying more. I wasn't paying any points, but I was paying more.
I want to kind of hop onto what you just said. Hard money lending really is for people who probably just can't get a loan anywhere else, and if that means they can't do the deal, then it's like that's too bad. I'll give you my example. When I first started flipping houses, I was working a full-time job as an engineer. I had some pretty decent income, over 6 figures. But the thing is, I already had a property here in the Bay Area. I already had properties out of state. So my debt to income ratio was really, really high. And a lender, like a normal lender like Wells Fargo or Chase, they weren't going to give me a loan for another flip property in the Bay Area, even though it was a slam dunk deal. This property I had was for $865,000. The property right next door to it sold for $950,000, and it was in worse condition than the one I had. So I was like, dude, this is a slam dunk deal. But I couldn't get a loan from a normal bank. So thank goodness for the ability to get hard money loans, because we were able to buy the property, fix it up, and sell it for an enormous profit.
Yeah, so it's not always the cost of the money. It is oftentimes just the availability of the money, because if your deals are good enough, they will absorb the cost. Maybe you pay a little much. I always have to shake my head when people are passing on deals because they're just not going to pay, 12% for that money. Okay, go ahead and make nothing. We could have made $50,000, but no, you're kind of missing the whole point of creative real estate investing, which is get creative and make some money.
Yeah, the money that you pay for hard money loans, even though it is higher than conventional financing, consider a cost of doing business. You don't really complain when a contractor goes in and fixes your house. So why complain about paying for the funds to do the deal in the first place?
And you just made me think of another one. It's not just the availability sometimes, it's the availability and the speed of the money, because trying to get a loan from a bank for a house that's going to be foreclosed on in 4 days is hopeless. It's never going to happen. The hard money lenders understand and kind of focus on and specifically are searched out for because they move much faster and they understand downtrodden or distressed properties, properties that have broken windows and missing doors. Banks want the house after you've got that all straightened out. That's usually what the typical bank wants until you get a relationship with them. And it's usually not even a big box bank that'll do it. It's usually a community bank that you need to go to get a relationship with, because Wells Fargo not going to have a relationship with anybody. You're a number, period. And if you don't fit in the box, you don't fit in the box. That's the other thing that hard money lenders are good at, right? You go up and you size up a deal. How much risk is this for your company that's loaning the money? And if there's not much risk, then the loan gets pretty easy. And if you're pushing the envelope on risk, then the loan, they might get a little more tedious and ask for a few more things because you're pushing them hard.
That's right.
How long does the average hard money loan take with your company?
We say 10 to 14 days. Generally speaking, for the newer clients who aren't familiar with how hard money works, they don't have their docs all in order, we say just put 14 days on your offer just to be safe. But I know for some of our top tier clients who done multiple business and deals with, I've closed in 5 days.
Yeah. They just have to have the title commitment, the insurance, and someone's got to go out and look at it, or there has to be a desktop appraisal or whatever it is. But you can get most of that stuff out of the way from the very beginning and already be on deck with your hard money lender, which means on deck saying they already have all your paperwork, they already have all your files. Don't wait till you find a house to get this stuff to them. If you know you're going to go out there and try to be looking for a house, you need to get with Sean or someone like him and get your file and kind of get your stamp of pre-approval. They know who you are, they know your social, they run your stuff, whatever it is they need to do. They might not even be running socials if they're a collateral only based lender. Are y'all checking people's credit, or are you just collateral only?
So yeah, you notice that our rates are kind of low, and the reason is because we are kind of in between that private lending and institutional lending. So we still do a lot of due diligence. We check their credit and whatnot, but we're not concerned about their income, their debt to income ratio, their tax returns. But we do want to see that they're a good borrower. That's when we can give them the best rates.
Yeah. So for those of you who don't know this already, if you have poor credit, it's killing you. It's killing you from everything from the insurance rates you pay to car loans to house loans to hard money loans. It's killing you. So if you have bad credit, go to work and try to fix it, because the stronger you are credit-wise, the easier things get and the less expensive. Many things that you may not even think of are costing you extra money because your credit's not good. That's a whole nother topic, but while we're there, I thought I would throw that out. So have we covered the hard money lending? What you want to say about that, Sean? Or again, go to 1000houses.com/PAN, PAN. And I wanted to say pawn, but I said that wasn't right. Pan, and all the information's over there. Check it out. We just like to let people know how effective and how much reach our podcast has. So we'll go through that little gate, but then you'll get over there and you'll find out everything you need to know. Again, pretty much nationwide. There's a few little pockets they can't, but you'll figure that out real fast.
So I would say, I would say something to consider. Even though we're a hard money lending company and we do pretty much have quote unquote unlimited funds, what we can give to you will really depend on how much money you already have. So like you're saying, like I can't give someone a pre-approval letter for a $10 million fund if they only have like $20,000 in the bank. They need to have enough money to show that they can pay for the down payment, closing costs, rehab costs, and possibly 6 months worth of interest payments. Basically, we want to make sure they have enough money to succeed and complete the project and not run out of money halfway through.
Yeah. I get that 100%.
Yeah.
You're just looking that someone has the wherewithal to see this deal through. And
Absolutely.
Deals take money, and there will always be surprises. So that they're looking for a little cushion. Like, you can't just be dead broke and trying to borrow money and hope it all works out in 5 days.
And so that's why I say, for anyone who's interested in getting a hard money loan, just feel free to contact any of us first. It's best to talk to a loan officer, have them understand your situation, what kind of deals you're looking at. And just by talking with them for maybe 10 minutes, you'll understand what you can and can't do. And maybe you get a pre-approval letter to start making offers for deals.
That's good. All right. So tell us about this other program you have, the, what did you call it? A rental?
Yeah. So we have a long-term rental loan program as well. And I think this one is probably really exciting for some of your listeners because, for hard money loans, people generally understand what it is and what it's used for. But the long-term rental loan program is a relatively new concept that many hard money lenders are starting to do, probably as of last year. Typically in the past, when people want to buy rental properties, to do leverage, they would go to a conventional bank like Chase, Wells Fargo, whatever. Put 20% down. And then, for the first 4 loans, everything was pretty easy. And then after you get 10 loans, the banks will cut you off. They think you're too much of a risk and they won't give you any more loans. So then you would have to do like a portfolio loan, or you have to, get one giant loan on one property and cash out your other properties, maybe have your spouse taking on another 10 loans, or go through private money lenders and pay 8% to 10% for more rental properties. This obviously is frustrating, and people who are real estate investors, they also want to lower their income as much as possible because they don't want to pay taxes. So they take depreciation. They do all these different things to show that they have no income. But because of that, now the banks say, hey, you don't have income. We go back to this debt to income ratio issue where the banks say you don't have enough income to support all of these rental properties. So basically, long story short, banks were hard to do rental properties if you want to scale big time without going to commercial loans. So recently, these hard money lending companies like ourselves, we created this long-term rental loan program. So we can now give 30-year fixed loans for investors as long as the property self-cash flows. So instead of looking at the individual's debt to income ratio, we look at the individual property's debt service coverage ratio. So does the income support the minimum payments? Does it support the principal and interest payments for the mortgage, the taxes, insurance, and HOA dues? If it passes that check, you can still get great 30-year loans for around 4 to 5%. It's going to be higher than conventional financing at 3 or 4%, but still something that enables you to scale your portfolio to basically an unlimited amount without having to take on private money loans at 8 or 10%.
Yeah, don't trip over the pennies on the way of the dollars, folks. I mean, when something's easy, but it costs a point or a point and a half or 2 points more, but it has no limits. I mean, just outrun your problem. You know what I mean? Just outrun your problem. I made a lot of money paying 10 and 12%. I said it before and I'll say it again. I built a whole career on what y'all would consider very expensive money these days. So if you haven't been around for 27 years like I have in the business, I mean, I've seen rates as high as 14 and 15 and 16 and 17%, for fix and flip deals or for creative real estate investing deals. I was still able to make good money, So these rates that Sean's talking to you about, they're actually kind of should make you giddy because they're fantastic opportunities. One thing is for sure, you got to jump through these windows when they're open because these windows don't stay open forever. I'm going to guess that at some point things change. I don't know if that's tomorrow or next week or next month or next year, but when interest rates are really, really low, you need to go through and refinance or finance. You need to do as much as you can and get as much of that pie as you can get, because nothing stays the same. That's the whole point of this whole world. We keep changing all the time. We have, it kind of goes in ebbs and flows, and we're at a really great place to borrow money right now.
That's true. I mean, even just a few years ago in 2016, 2017, when I was buying my first rental properties, I was okay with paying 5% for my investment properties. And this is with conventional financing too. So to get like non-conventional financing at 4%, it's a pretty good deal. So a lot of our clients are really happy with it.
I mean, I took a home equity loan out, for a lot of money at 1.87.
Wow, nice.
I didn't even know what I was going to do with it, but at 1.87 for 15 years fixed, I said, I'll find something to buy that makes more than 1.87. I promise you, and I'm going to buy it. Eventually the rates just got so low. I always valued having my home paid off free and clear, but at 1.87, it's like, I don't care anymore. I'm going in debt in my house because.
Well, and your point, it's a HELOC, so it's not like you have to it's not like you took it out. It's a revolving line of credit that you have access to whenever you need it.
Yeah. So, well, I mean, if you're going to go ahead and set it up, you need to spend it, and get what you're going to get, so you can start making money on it. So they approved me, and it was out of the account within days, because I already, while they were approving me, I was out trying to figure out what am I going to do with it. So
that's amazing.
Okay. So it's all about cash flow, and in the the rental loan,
Yep.
about appreciation and being able to hold on to houses for long periods of time and just keep adding on.
Yep.
Anything else we should talk to these folks about before we probably wrap it up, Sean?
That's basically what I want to come on to the show and talk about. Just regular hard money loans, how they work, and just introduce them to the concept of the long-term rental loan program. Long-term rental loans are amazing. Our clients love them. There are some small intricacies here and there. They might be a bit too complicated to go into in full detail on this podcast here, but I invite any of your listeners to go check out my YouTube channel. I have a bunch of videos on hard money loans, the long-term rental loan program, and just real estate investing tips in general.
All right, so all that will be over there too. If you want to go to his YouTube station, just go to 1000houses.com/pan, PAN, and all that stuff will be over there. So I appreciate you taking the time, Sean. And sorry this backdrop wasn't as pretty as some backdrops, but like, who gives a damn, right?
I don't think your podcast listeners can see your backdrop anyway, so it's all good.
Yeah, so it's all about the content, though. It really doesn't matter. I've gone to and sat in a lot of uncomfortable chairs just to find one nugget that I could get, so I could go home and make some more good profit.
Yep, absolutely.
All right, my friends, this is Mitch Stephen with the 1000houses.com podcast. We've been speaking with Sean Pan today and talking about his hard money loan company that loans pretty much across the nation. One last time, 1000houses.com/PAN. Go over there and find out if this program's right for you. The money's dang sure cheap enough. So see if you can fit in the mold. If you can, you're going to get some really, really great loans. Really great loans. I'd like to thank livecom.com for sponsoring this episode, LIVECOMM.com. Livecom was really invented to solve the problems that I was having in this industry, and that a lot of other people weren't addressing. So I addressed them. Today I average 4 days on the market in my houses, only 4 days. And I put out no signs, not one sign, not anymore. I'm done with signs. And if you go over to livecom.com, you'll figure out how I did that, plus many, many, many other ways to use mass texting effectively, legally, and just really change your business, your lead sources, how you sell, how you find and generate leads. And it works for almost any business. It can work for a lot of businesses. And if you really have a business that's out of the box and you want to strategize on how Livecom could work for your company, just call me, 210-669-4020, 210-669-4020, because I love putting my marketing brain to your business Well, that's, I've been doing this for a while. So when you tell me about your business, I can probably find 2 or 3 or 4 or 5 ways you can use the system to change your bottom line. So livecom.com, livecom.com. I want to thank y'all all so much for stopping by to get you some Sean Pan, and we're out of here. See you later,
Thanks.
Sean.
Bye.